Hey guys, this is Money Value, I'm Olga and I'm back to tell you what happened this week for the last time this year. By the way, Merry Christmas! They say 20 years ago Jesus Christ was born, but this is not news. Here what is. You remember we talked about Moderna a lot in previous videos? Even though everyone needs vaccine, Moderna is having a tough week. The thing is, the vaccine approval by the Food and Drug Administration triggered a sell the news reaction that has dropped the stock to a December low. It is down another 6 points in Wednesday's pre-market, bringing the 3-day total to 21 points, or about 15%. What's ahead for Moderna? For starters, the aggressive distribution signals and intermediate correction that should last well into the first quarter. To be honest, no one is sure how many vials and variations of the vaccine will be needed to snuff out the virus, especially with competing drugs coming online. At some point, attention will turn to Moderna's excellent long-term perspectives given its groundbreaking work on mRNA compounds. Well, let's hope for the best by expecting the worst. Since there can be only one hope at the end of such year, yep, Elon Musk. He won't be left out in this video. But before we move on to him, let's see what else is happening on the market of electric cars. Apple reportedly is developing an electric vehicle with an advanced battery that will deliver a significant boost in range at much lower cost than current battery technology allows, while also offering self-driving capabilities. Apple's so-called Project Titan is set to be targeting the start of production for 2024, though pandemic-related delays may push production into 2025 or beyond. If Apple succeeds, this represents a challenge to Tesla in the market for advanced electric vehicles. They're planning to make those cars for everyday use. The critical feature of Apple's electric vehicle is supposed to be a significant advance in battery design that simultaneously offers radically reduced cost and increased range. Additionally, LiDAR sensors such as those that appear in the iPhone 12 Pro and the iPad Pro models released in 2020 probably will be key components of the self-driving systems, given three-dimensional views of the road and other surroundings. Manufacturing and selling cars at a profit will be a major challenge for Apple. As a point of reference, Tesla took 17 years before it could generate sustained profit. By the way, it's obviously not the first Apple's and electric car clash. Elon Musk says had once reached out to Apple for acquiring Tesla. On Tuesday, Silicon Valley billionaire Elon Musk said he reached out to Apple Chief Executive Officer Tim Cook during the darkest days of the Model 3 program to discuss the possibility of the iPhone maker acquiring Tesla for the tenth of its current value. He refused to take a meeting, said Musk, CEO of electric car maker Tesla, replying to a Twitter chain which cited a Reuters story on Apple looking to produce a passenger vehicle by 2024 with the new battery technology. Things were a bit challenging for Tesla back then, however, Tesla overcame the problems and has since racked up a string of quarterly profits. The electric automaker became one of the most valuable companies to join the S&P 500 when it became part of the widely followed stock index on Monday. Shares of Tesla, however, ended up 6.5% lower in its S&P 500 debut, amid news of potential competition from Apple. Okay, now let's get back to the virus for a minute. Cruise line stocks sunk Tuesday over fears of a new, supposedly more infectious COVID-19 mutation discovered in the United Kingdom. The development comes as a major setback for the group, which has come under pressure in recent weeks amid a spike in global coronavirus cases, leading to uncertainty about the resumption of sailings. However, panic selling may provide a buying opportunity, given the World Health Organization said that the Pfizer's and Moderna's vaccine would likely be effective against the new virus strain. We all remember what happened to Bitcoin last week. This week, something else that involves coin brings us news. Coinbase, one of the most well-known names in the cryptocurrency ecosystem, has filed for an initial public offering. In a short blog post on its site, the San Francisco-based company stated that it had submitted a draft registration statement on Form S-1 with the Securities and Exchange Commission. The Form S-1 will be made public after the SEC reviews and approves the statement. While crypto miners and Bitcoin holding companies are already listed on the market, Coinbase's public offering will be the first of its kind for a company that for some retail investors is synonymous with Bitcoin and cryptocurrencies. It will also shed light on the workings and traction for cryptocurrency exchanges, arguably the pivotal hinges over crypto infrastructure that is still being built. Started by Airbnb former software engineer Brian Armstrong in 2012, Coinbase has become one of the most recognizable names associated with Bitcoin and cryptocurrencies. The company's stated goal is to create an open financial system, and it mainly derives revenues from two sources: its operations as a crypto exchange catering for retail customers and institutional investors, and its custody business, which offers custodial services for cryptocurrencies to banks and institutions. Based on trading volume figures, Coinbase Pro, the company's institutional trading arm, is North America's biggest crypto exchange. The flip side to this success is that the firm's fortunes are inextricably tied to the price of Bitcoin. Well, while it sheds lights on the working and traction for cryptocurrency exchanges, we can all shed a tear. England has been put on notice for a New Year lockdown after the government's chief scientific advisor warned that the extension of Tier 4 restriction may be needed. With the new variant now surging across the UK, an announcement that large areas of England will join London and parts of Southeast England in Tier 4 is expected on Wednesday, December 30, when the next review of the tier system is due. The reason is a new strain of COVID-19 was found in this country. They say it's 70% more contagious than the one that has already killed lots of people, though Moderna and Pfizer say their vaccine would work for that strain too. Well, all the virus-related mess has consequences. I'm not even gonna mention all the people who has lost their loved ones. That's awful, and there's no way I'd find the right words. But the pandemic also has resulted in high unemployment rates. More than that, millions could face unemployment aid delays even after COVID-19 relief package. Even though Congress struck a COVID-19 stimulus deal late Sunday to extend badly needed financial relief to millions of jobless Americans, some people could see their unemployment benefits lapse because outdated state systems could slow down the distribution of aid, experts say. The lag could affect 12 million Americans who were set to lose their jobless aid the day after Christmas if Congress didn't pass the new legislation. The House and Senate were expected to debate and vote on the package Monday. "We're too far gone," says Elizabeth Pancotti, a policy advisor at the pro-worker Employ America. "We would have needed a deal before Thanksgiving for there not to be a lapse in benefits." But that's not it with all the payments. You are not the only one who wants bigger stimulus checks. New stimulus checks will be just $600 instead of $1,200 like the last time. Mr. Trump isn't happy about that too. "It is really a disgrace," Trump says in a video that was posted on Twitter Tuesday night. "I'm asking Congress to amend this bill and increase the ridiculously low $600 to $2,000 or $4,000 for a couple," he says. Trump still hasn't signed the $900 billion COVID relief bill that includes the new direct payments and involved months and months of difficult negotiation. It passed Congress Monday night. On Thursday, the US House blocked the move to increase the size of stimulus checks. Treasury Secretary Steve Mnuchin has said the money could start flowing into Americans' bank accounts as early as next week. But what happens now? 2,000 checks? Democrats are on board. The new aid package includes not only the fresh direct payments to help struggling US households and stimulate the weak economy, but also money for struggling businesses and $300 a week in bonus unemployment benefits. On Christmas Eve, House Democrats tried to approve 2,000 payments with a simple voice vote, but Republicans shot them down. Speaker Nancy Pelosi plans to hold a formal vote Monday on a standalone bill to bump up the amount from $600 to $2,000. So maybe it's not that bad. You know what is bad in many cases? Lawsuits. Last week we told you Google was sued. Today, someone else is. China has launched an antitrust investigation into Alibaba Group and will summon the tech giants and group affiliate to meet in coming days, regulators said on Thursday, in the latest blow for Jack Ma's e-commerce and fintech empire. The probe is part of an accelerating crackdown on anti-competitive behavior in China's booming internet space, and the latest setback for Jack Ma, the 56-year-old former school teacher who founded Alibaba and became China's most famous entrepreneur. It follows China's dramatic suspension last month of Ant's planned $37 billion initial public offering, which had been on track to be the world's largest. just 2 days before shares were due to begin trading in Shanghai and Hong Kong. In a strongly worded editorial, the ruling Communist Party's People's Daily said, "If monopoly is tolerated and companies are allowed to expand in a disorderly and barbarian manner, the industry won't develop in a healthy and sustainable way." Shares in Alibaba fell nearly 9% in Hong Kong, their lowest since July, while rivals Meituan and JD.com both fell more than 2%. Alibaba's US stock tumbled 13% in its larger one-day drop since its debut on New York Stock Exchange in 2014. Regulators have warned Alibaba about the so-called choosing one from two practice, under which merchants are required to sign exclusive cooperation pacts preventing them from offering products on rival platforms. One more news about complaints. The Securities and Exchange Commission announced that it has filed an action against Ripple Labs and two of its executives, who are also significant security holders, alleging that they raised over $1.3 billion through an unregistered ongoing digital asset securities offering XRP. US-based cryptocurrency exchanges have to consider whether to delist XRP in light of the lawsuit. Chief among these exchanges is Coinbase, which, in addition to the normal considerations around listing XRP, is also seeking SEC approval to take its shares public and allow retail investors to trade them. If the SEC prevails in its lawsuit, XRP may be classified as security, meaning under US law, entitles offering for trading must register as securities exchanges. I guess there can be an investment-related video that wouldn't mention Tesla, huh? Tesla's S&P 500 inclusion is official, and its debut is not looking so good. The share shed 6.5% on Monday as investors who bought the stock in anticipation of its entry into the benchmark cashed in. The stock fell to its session low following a report that Apple is moving forward with its electric vehicle production. The electric car maker has a 1.69% weighting in the index, the fifth largest. It is the sixth biggest company in the large cap benchmark when counting the share classes of Alphabet together. Here's the graph, actually for the first time during this video. Okay, let's make the last news a bit more positive. It's Christmas after all. Stocks rose Thursday as traders look beyond new hurdles to key stimulus and spending bills in Washington. Each of the three major indices ended the session higher, and both S&P 500 and Dow rose for a second straight day. The real estate and information technology sectors led gains in the blue chip index, while the energy sector lagged. As of Thursday, the period of the typical Santa Claus rally had begun. This marks the last 5 trading days of December and the first 2 of the new year, when stocks tend to rise amid a wave of optimism around the holiday season and New Year. According to LPL Research, stocks were higher over the 7-day trading period 77.9% of the time since 1950. That's it for today. Stay safe, take some time to spend with your loved ones, don't forget to wear a mask, and smash that like button. Merry Christmas, I'll see you soon. Bye.